Okay, so AAA is what, Trent?
Undistributed S Corp earnings.
And as long as we have AAA, we don't have to contend with CE&P, correct?
Correct.
So AAA is an insulator to CE&P. Now let's see. Polar Corporation converted to S Corporation in 2007. When the conversion was completed, Polar had $400,000 of earnings and profits. At the end of 2013, 6 years later, since converting to S Corp status, Polar has $300,000 of AAA. What are the tax consequences of the following distribution possibilities? Distribution of $200,000, $500,000, $800,000, and we're going to do this in 3 examples. Okay, I think the distributions, if I recall correctly, are constants, but the basis that the shareholders have is different. So if we have a distribution of $200,000 and we have basis of $150, and we have a distribution of $500 and we have basis of $150, and we have a distribution of $800,000 and we have basis of $150, what does that mean? Okay, I think that's the way this is constructed, I think. So, and I actually think I give you the damn answers. Distribution where tax basis in the corporation is $150,000. So here's the distribution of $200,000. So what is, first of all, is this a corporation with CE&P or without CE&P? With CE&P. So if we have a corporation with CE&P, are we under the provisions of B or are we under the provisions of C?
C.
C. And C1 says what?
The extent of AAA.
What happens to the extent of AAA?
Prefer to be.
Just gotta be
Just go to B, okay? How much AAA do we have?
300.
300,000. So if we have 300,000, that means that the entire distribution is points you back to B. So what's B? So if we have B, we have no dividend. We have no dividend because we measure it. That's what this page is doing. This is entity level. But at the shareholder level, since we have AAA and we're able to point to B, what's B say, Emma?
B says you have a distribution up to your basis that you have, and then any excess is a sale exchange on.
Okay, so I got an E&P column, a basis column, and a distribution and excess column. So in the AAA column, since distribution is less than AAA, it go to B. So that means I'm dealing with the basis column and distribution and excess column. So my basis is how much, Emma?
150.
So the 150, how big's my distribution?
150.
No, how big's my distribution?
200.
200. So the first 150 is going to be a tax-free return of basis, and then the amount of excess is what?
50.
50. So the punchline of this is your first measure. What was our first measurement, Emma? It's an entity level measurement.
The A.
What's my AAA versus the amount being distributed? Is my amount being distributed more or less than my AAA?
Less.
In this case, it was less. Since it was less, that kicks me all the way over to B for the full distribution. And since it kicked me to B for my full distribution, at that point you have return of basis or distribution in excess. So in this, since we have 150,000 of basis, we have a return of capital of 50 and a distribution in excess of 50. How much gain is being reported by this particular shareholder, Emma?
50.
50. Okay, so now we have a distribution of 500. Emma, who you want to call on and be quick about it?
Thomas.
Thomas, we have a distribution of 500. Okay, so we have an entity level measurement first. And what's that entity level measurement do first?
Take away from AAA.
Okay, and then what?
and then goes to E&P.
Okay, so automatically we know since we have AAA, which is defined as what, Trent?
Undistributed S corp earnings.
Undistributed S corp earnings. We have 300,000 that this particular S corp has earned that's undistributed. So that means that 300,000 of my 500 is going to be distributed under normal distribution rules. And the way I think about this, right, wrong, or indifferent, I got 500. There's an accounting that goes through this. Well, it says C1 / AAA is going to account for 300,000 of that distribution. Then we got C2 / EMP, which accounts for 200. So at the end of the level, I know I've accounted for all 500. So in order, going back to, you have to categorize the amounts, and then you have to diagnose the tax consequence of the category it falls into. So in this case, we have a distribution of 300. So the first 300, Trent, we have to diagnose the tax consequence of that distribution. So now, since we're under normal distribution rules, we have to take that 300 and filter that through the shareholder level consequence. So the shareholder level says I have 150 a basis. So B1 says what, Kaylee?
If you have 150 in basis, then it's just
A tax-free return, okay? So now, this turns into, at the shareholder level, its own subset. I got 300 that is now being accounted through B. B1 says 150 is accounted for. That means there's 150 left. What happens to that 150 left, Kaylee?
Well, it's a distribution in excess of basis.
And that's B2. Okay, so now we've accounted for the 300 because we filtered it through the shareholder level. Now we have C2, which is just straight up what?
E&P.
E&P, but how's that taxed to the shareholder?
Dividend.
Dividend. So in this case, we have 200,000 of dividend and 150 of distribution in excess. So then we have 800,000 of distribution. So again, at the end of the level, now we have to characterize how to account for this at the shareholder level. So if I have AAA, or excuse me, I have a distribution of what? 800,000. So now I have to categorize how that 800,000 is going to be segregated for provision purposes. How much is my AAA? 300. So AAA, which is C1, is 300. What's C2? EMP. How much EMP do I have? 400. How much is left? Normal. 100. So now, at the any level we've accounted, we've broken out the distribution by its own category. So now we go to the shareholder level, and the first, how much? First, what the hell? Well, that's fucking wrong. Well, that's really wrong, isn't it? Okay, I wish somebody had caught this, not me. The first, on this page, what you probably should write is distribution dash C1 next to that, because I have 300 that I'm accounting for. And the only thing that was really accounted for there in this column was 150 return in basis, and 150 distribution in excess. The sum of those two numbers is 300. That's a screw up. Then I have a $400,000 dividend. So now I have here 150 distribution in excess. I have 400K dividend. And now I got this other 100, which is the last tranche. First tranche says to the extent AAA, it's normal distribution rules that says return to basis, capital gain to the extent it exceeds basis. The second is dividend, which is my 400. The third tranche, when I make the assessment, again at the entity level, this is entity, and this is why it's so hard to track. At the entity level, I got another 100, which is my normal distribution rules. So now I go back, I would now put distribution -C3 on this schedule that says, well, I have no more basis, so that's 0, and my distribution in excess on that last tranche is 100,000. So that's wrong. So I have this 100,000 distribution in excess, and this is C1, this is C2, this is C3, and I have total income that's being generated of 650,000. That's an error on my part. I'm going to stop because I screwed that up, and I want to make sure that we're all on the same page. Kaylee's eyes say that we're not.
So the total distribution of excess would be 250K then?
It would.
Can we start over on all this?
Start from where? And I'm more than willing. Just tell me where you want to start.
Here's just like the last example.
Is that what you're saying, Jameson?
Yeah. I don't get like the entity.
And
Let's do it that way.
Is the pink.
Okay, so I got my AAA column. What are my columns over there? AAA,
E&P,
E&P,
basis,
P basis,
distribution from excess.
distribution in excess. Okay. So let's do this again. We have an $800,000 distribution that's coming out of the company. Step one, for whatever it's worth. Maybe I did that on purpose. I'm going to give myself credit when I say what's the variance there. But I don't know if I did that on purpose or not. It'd be nice if I did. Okay.
Well, I'm imagining you wanted us to figure out what, when you, the normal is.
Maybe. I'd like to think that's what I was doing. I would do something like that. I'm not confident that's what I was doing. But if you want to let me off the hook, we'll say that's what was going on. Step one, you have to quantify and break the entity level you have to break down the distribution that's being made into its separate components based on the entity's characteristics. The entity's characteristics are $300,000 of AAA, $400,000 V&P. So C1 says to the extent you have AAA, which is what, Trent?
Undistributed S Corp earnings.
Undistributed S Corp earnings, you reference your normal basis rules. So C1 says normal basis rules. Okay, so let's take this instead of categorizing it all at one time. Let's do it piece by piece. So, and I'm going to eliminate AAA from this because that might be better. And I'm going to switch this to go over here, E&P. So I got my C1 distribution, well, excuse me. I got my beginning basis of how much? 150? Yeah. 150. So I have my C1 distribution, which I'm going to put A here, point it down, A here, because at the end of the day, these two are related. I made an entity level determination that 300,000 goes through my normal distribution rules. So my first line here is C1. So I have 300K that has to be accounted for because I made an entity level determination. So C1 points me back to where, Lucas? Normal distribution rules under B. Okay? Normal distribution rules under B says what, Kaylee?
To the extent of basis, it's non-taxable return. And past that, it's a gain.
Okay? So B1 says I have 150,000 return of basis. I've now run completely through my basis. How much was my distribution from AAA, Kaylee?
300,
How much did I account for?
150.
150. So I got 150 left. That's B2, which is distribution in excess. So then I have my second entity level determination, which is of the 800, 3 has been accounted for. I have 400,000 of CE&P that's in the company. So C2 says to the extent I have CE&P, it's dividend. So B, C2 says that C2, I have a $400,000 dividend. Isn't that my number? C2 affects basis not at all. It affects distribution in excess not at all. It affects CMP / dividend. So now I have my C1 accounted for, which was 300. I have my B accounted for, which is 400, which is dividend. And now I got to do C, which is C3. And C3, Tatum says what?
Refer back to E.
Refer back to B, my normal distribution rules. So do I have any basis left, Tatum?
No.
I do not. So B1 is 0 because I don't have anything left. And this is 400K. This is 100K. So the 100K was depleted by the basis column by how much? 0, because there's no basis left. So B2 says 100K goes to distribution in excess. So now I have 0 basis because I started with 150. It was depleted by tax-free return of basis under B1 of the 300 that I classified at the entity level. I had 150 because it was distribution in excess. And then C2 said, well, 400,000, I made a determination at the entity level, 400,000 was distribution associated with dividend. So I got that in my dividend column. And then C3 says, refer back to what?
B.
B, which says, well, to the extent you have basis, which is 0, you can account for that distribution under that provision. Well, since it's 0, 100 has to kick into B2, which is now distribution in excess. 0 basis, 250 of distribution in excess, 400 dividend. Did that help?
Yes.
Okay. So let's just keep the same procedure for the hell of it. How much is my basis for this one?
300.
300. Beginning basis. And let's see. Okay, my distribution is how much? 200. How much AAA do I have? 300. So I have enough to account for the full, I have enough. My entity distribution has been fully accounted for in that first tranche. So now that I've accounted for the first tranche, the second tranche is 0 because I didn't blow through AAA. My third tranche is 0 because I didn't blow through AAA. So now I come down here to A, and A says what? To the extent of basis, it's tax-free. So since it's to the extent I have tax-free, I have 150. My ending basis, is 150. Correct? Okay, so,
200, right?
huh? Oh, sorry, 200. Yeah, 100, whatever. You guys got me. Yeah, that would throw you. Okay? So, that was clear to everybody, I presume. So if we have 500, we have 500 distribution. My AAA equals 300, and AAA is what, Trent?
Undistributed S corp earnings.
Undistributed S corp earnings. So I have 500 to account for. The first stop is AAA. How much is 500 bigger than 300? Yes, it is. So I have 300. I'm going to go over here to E&P for the hell of it. This is getting more refined as we go. E&P is what, 400? So it says, well, now that we've accounted for 300, we got to go to the next stop, which is E&P. How much do I have left to account for? 200. How much is my E&P? 400. So the E&P stop is going to account for all 200. So now we come down here for A. A comes down here. We have a distribution of 300, correct? So we have 300. Did we fully account for the entity level distribution out of AAA? We did. Next stop, E&P, 200. So at this point, we have a 200K dividend. We have 0 basis. And we got 0 distribution in excess. And for whatever it's worth, because this is kind of important, my AAA is depleted down to 0, and my E&P is depleted down to 200 by virtue of $200,000 dividend being reported and this depleting down to AAA. Okay? So what's my next one? What's my next? Is it 800?
Yeah. We will.
800. AAA is how much?
300.
300. So we account for the entity level distribution by its category. 300. How much do we have left to account for after we account for the first 300? 500. How much is my E&P?
400.
How much do I populate the next line with?
400.
400. How much do I have left over? 100. Okay, so now I have 300 gone, and I have 400 gone. So now this is 0, and this is 0. So now now that we've accounted for these items at the entity level, now we have to drive it down to the individual level. So under C1, we have 300. Under C1 it says normal distribution rules, return to basis, or distribution in excess. So we have 300 that we have to account for. We have 300 at basis. So C1 is fully accounted for because basis fully absorbed that portion of the distribution. E&P, 400. Now we have 400 that needs to be reported for E&P. Now normal, C1. So do we have any basis to absorb that? We do not. So now we have distribution in excess. So this is 0, 100K, 400K. And we have $500,000 of total income that we have to account for. Okay? Distribution where tax basis is 450. So beginning basis is 450, right?
Yeah.
So, and I assume we have the same level of distribution in there, right? What's my first level of distribution? In
200.
200. Okay. 200K. AAA is how much? 2
3.
or 3, excuse me. 200K. It's counted for. 200 down here. We have 250 left over. Does that make sense? Okay. The next one we have how much?
5.
500. We have 500. We have AAA at 300, so I have 300. 300K. And then how much do I have to account for after that? 200. So I come down here. I have C1, 300. Normal distribution rules. 300 is less than 450, so I got a tax-free return to basis. The next one is 200. 200 of E&P, which means I have 200 dividend, and I have 200 depletion of my E&P at the end of the level. What's the next amount?
800.
800. So now we have 800. How much AAA do we have?
300.
300. So that depletes down to 0 at the end of the level. We've categorized 300 in accounting for our distribution. How much is left? 500. How much E&P do we have? 400. How much distribution do we have left to account for? 100. So now my E&P at the end of the level is 0, AAA is 0, and now I have to account for each bucket that I segregated the distribution into. C1 says normal distribution rules. Basis first, distribution in excess of basis. So 300. So I've now accounted for the full tranche because my basis can absorb that distribution amount. Next piece, 400. Now I have 400 of dividend coming out. And then I have the last one, 100. Well, I have enough basis to absorb that. So I have 0 distribution in excess in this case. And I have 50K of basis left over with 400K of dividend. So is AAA an entity level measurement or a shareholder level measurement? Entity. And why do we measure it at the entity level? Why do we measure AAA at the entity level? Why do we measure AAA at the entity level?
So then you can categorize it.
So you can categorize the amount of distribution that follows normal distribution rules. That's why you have an entity level. Yeah, Trent.
So stock basis had like the ordering rules where like you go income, then distributions, then non-deductibles or whatever. What's the order for AAA? Because that would impact the amount of dividend.
I think I talked about this somewhere. I don't know. but that's a fabulous question. Okay? That is a really good question.
Is
Can I
it gift card worthy?
do what?
Is it gift card worthy? How many do we have left?
2.
You can hold off. Yeah.
Where am I going? Actually,
I don't think it is, no.
no. What's not in there?
That it's like you have to issue 1099.
No. Nice try though. Okay, so where I'm going with this is Trent, if I'm tracking, says, well, we talked about this ordering rule, is what you're saying, correct?
Yep.
And when we talked about the ordering rule, I think you said something about there was a time when your losses exceeded your basis, maybe, and you have this negative number that you have to account for on the 6198, maybe. Is that what you're saying?
No, but I'm following what you're saying.
What were you saying?
Well, yeah, I guess technically, yes. It's essentially the same thing.
Okay. So you're saying, well, I got this negative amount that I have to track on the 6198. How does that work? Because earlier you said Schedule K is entity level and it's a measurement. And you have K1, which is shareholder measurement. And if we were always an S Corp shareholder, the two are going to be in sync. So in the shareholder level, you run into this basis problem that it just caps you and puts you at 0. Correct?
Mm-hmm.
So if that's true, and again, correct me where if I'm not interpreting your question correctly, if that's true, what happens with AAA when you have that same negative impact?
Yes. I think that's essentially the same thing as what I'm asking. Like, is it the same order where you go income, then distributions, or are distributions the last thing you come to AAA?
We were asking the same thing. You're asking it differently.
Okay.
I mean, I'm driving at the point you're making, but the point you're making is a great question, but you're because you don't have a point of reference, the question's kind of wrong.
Okay.
It's a great question, but it's not formulated correctly because this is a good concept to know. And this actually drives me nuts because is AAA and basis the same thing? It is not. AAA is measured at the entity level, correct?
Yes.
Basis is measured at
Yeah.
shareholder level. So I think what Trent is saying is I have beginning basis of 10. And actually, what I said earlier was wrong about AAA and basis being the same thing. Because if I fund a company with $10,000 of cash, it's going to be a debit to cash. And I'm going to say that stock is worth $1,000 for under par value. Well, my stock section is going to have $1,000, and I'm going to have $9,000 of APIC for my opening entry for the balance sheet. Cash at 10, stock of $1,000, APIC of 9. Does that all make sense? To the extent you have that opening entry on the balance sheet, that will be a disconnect in between AAA and basis, because I funded with 10,000, so my basis number is 10,000. But AAA, the company hadn't earned anything yet. So that was a misstatement on my part, or an incorrect statement on my part. There is a disconnect automatically. But other than that opening entry, it's in sync. So if the company has a $10,000 loss, let's make it 20. Trent's saying, well, wait a minute. I can only deduct up to 10. My basis is 0, and I have a $10,000 carryover on my 6198. I think that's what you're saying. But there's ordering and some other things that we have over here to make a determination of how we diagnose what's hit my 6198, and there's income first, distribution next, non-deductibles, and losses, I think, was the ordering. And Trent's saying, well, there's this ordering that we have to account for. There is no ordering for AAA. Because AAA just goes negative. So, well, that's bad. Because if let's pretend that we convert, we have a corporation X that's owned by A, and it has a balance sheet that says cash 1 million, equity 1 million, which would infer EMP is what, Trent?
0.
1 million.
Yes.
Yes, he says confidently now. Okay, my EMP is 1 million. So, Lane and Associates says, why are you a C Corp? What are you doing? We don't want you to be subject to double tax. And oh, by the way, I'm smart enough to know that you don't have LIFO, so we don't have that issue. So why don't we convert to S status? Fine, we convert to S status. So when we convert to S status, what do you think my AAA is when we convert? Nothing. Trent, is that right?
Yeah.
Why?
It's an S corp, not a C corp, and so the earnings from the C corp are in a different column.
Correct. And we've earned nothing as an S Corp. So, this is our first year as the S Corp. And we have a $20,000 loss, which drives my AAA negative. Okay? So I'll erase this and say, this is my fact pattern. It's now negative. Tatum, C1 says what?
To the regular rules
To the extent of,
basis.
Emma, help her out.
To the ex- to,
What'd you say, Emma?
to the extent of basis tax free, and then anything over is
Jameson,
AAA.
what about AAA?
To the extent of AAA.
You look to normal distribution rules.
I was saying the normal distribution.
Yeah, but what sends us? What's our guidepost?
The AA.
The AAA is our guidepost that sends us to normal distribution rules. How much is my AAA? Do what? What is it?
Negative 20.
Negative 20. So if I make a distribution, do I have any AAA? I don't. And as a matter of fact, the company has to earn $20,001 just to have $1 of AAA. It has to dig itself back out of that hole. Because we have the cash. We could lose $20,000 because we have $1 million of cash. That's no problem. So AAA is the guidepost. It's an entity level measurement, is it not? And if you have, and I say the same ingredients move AAA as it does basis, well, a loss moves basis. A loss moves AAA. The same ingredients move them. Basis can never go negative. AAA can go negative.
What if you have negative AAA when the return's final?
That's not going to matter. So let's put a finer point on this.
Okay.
Okay, let me answer that differently than the question that you asked.
Okay.
S corps come in two categories, do they not?
Yes.
And what are those two categories?
With the NP.
With EMP and no EMP. correct? Tatum, C1 references what?
AAA.
AAA. C2 references what?
EMP.
EMP. C3 references go back to B,
Right.
correct? There's this middle one that says EMP, correct? And if we go, you're okay. If we all go back and reflect on what is the header, if you can find that page, maybe I'll just find it on here, is, what's that say? Highlighted.
Having EMP.
Corporations with CEMP. And what, again, what do these words say? Accumulated adjustments account in C1. The AAA account is a guidepost. To tell you how much of your distribution at the shareholder level gets to be accounted for under normal distribution rules. It's a guidepost. It tells you where to go. Now, if we look at B, what's B say?
S corporation having no EMP.
S corporation having no EMP. Is there any reference at all in B to AAA? Because you don't need the guidepost. So AAA is a guidepost that says if you have EMP, you have to measure your AAA, which is what, Trent?
Undistributed S corp earnings.
Undistributed S corp earnings. Only because they don't want you to be able to bail out your EMP. They only want you to be able to distribute what you earned as an S corp. So AAA on a corporation with no EMP on it, let me do this differently. If a corporation has EMP on it, guess how much I care about AAA? A lot. Because it's my guidepost. And I have to be able to defend my AAA number because it's a guidepost to help me tell me how much I'm harvesting out of my entity level distribution to be classified as a return of basis and a distribution in excess. It's a guidepost. So on a corporation with CEMP, that guidepost is super important. If you don't have CEMP, guess how much you care about AAA?
0.
0. Not at all. So let's play with this concept because CAS people.
Yo,
I don't know if this is still true or not, but this one kind of used to drive me nuts. This might not be true because maybe this slipped through the cracks and nobody really understands, nobody knows, and maybe you don't even know the rule. Because earlier I said AAA is measured where? The entity. Basis is measured where? Are they the same thing? No, they're not. So what it used to happen in the CAS department, and may or may not still, and actually I'm pretty interested to know because I've become unburdened by certain details in life, is the CAS department would look at a tax return, and there's this AAA section on the tax return, and the AAA section has $10,000 at beginning AAA, and they look at that going, and there's a $20,000 distribution. So what used to happen, and maybe it's gotten better, is they conflated or said AAA and basis are the same thing. So if 20,000 is excess of the 10,000, what was inferred was there was a $10,000 distribution in excess. And if there's a $10,000 distribution in excess, that's a taxable event. And if there's a taxable event, well, we aren't going to have that happen. We're not having that happen. So instead, we're going to take this $20,000 distribution, or $20,000 amount, and we're going to do two things. We're going to classify 10,000 as distribution and 10,000 as a loan to shareholder. So now my AAA is 0. Does that still happen, Jimmy?
Yeah.
I mean, people are keying on AAA, and that's the wrong thing to key on, because on that other thing that I had in the wrong spot, basis and AAA could be different because somebody died, somebody bought the stock, and if somebody died or bought the stock of the company, you know, the inside AAA is 10,000. Outside basis, because they bought the stock, could be $1 million, because that's what they pay for their shares. So AAA has been used, and I'm serious. Is that still something that happens?
Depends. I mean, some clients, if they already have it on the books, then they'll just throw it in there. If they don't, then I don't know what they do with it, to be honest. But
Okay, I mean this is a thing, right? Because because every item that moves AAA is the same items that move basis, and AAA and basis sure as hell look like they're identical twins, the exact same thing. They're not. They're cousins. One is measured at the entity level, which is AAA. The other is measured at the shareholder level, which is basis. So your question, Sam, was if we have negative AAA at the end, well, do I have EMP? If I don't have EMP, I don't give a shit about AAA. If I have no EMP at the corporation, AAA is a non-factor to me. It could be catastrophically wrong,
Really?
and I don't care with no EMP. If it has EMP, then I care.
But
Is it-
wouldn't that mean that you like distributed way more than you're allowed?
I think she just joined CAS.
Well, I know that there's a difference between basis and AAA, but now I'm just going in circles.
It's hard. It's a hard concept. We'll come back. Yeah.
would that happen a lot when like one person from the S corp takes more than what they should? Because don't usually you have to do evenly distributions.
Say that again.
Like
Sorry.
if we were both part of an S corp, or like we would each have to take 50,000 if evenly, like if
Yep.
we did. So if one took 60 and one took 50, is that when a lot of like the loan to shareholders then gets like reclassed up to show that they both took 50?
It certainly should.
Yeah.
It certainly should.
That's probably when it happens more for us, is when one shareholder takes more than the other.
So the concept of distribution in excess, I think is what you're saying, is less of a concept today in the CAS department than what it was 15 years ago.
I feel like when I've seen it, I feel like the CAS department usually doesn't just throw it in a loan. Usually I feel like we ask the tax manager and then let them decide what to do.
So you're sensitive to it,
Yeah, but if we see it, then we ask.
okay? Which I think is a better methodology than what was there 10, 15 years ago.
Well, they didn't have me 10, 15 years.
You know, how do you stuff your cape inside that shirt? That's what I wanted, Nicola. How do you stuff it in there? Yeah, I don't know. Let's see.
20. You answer my question.
Do what?
I don't think I got an answer to my question.
What was your question?
I think I was thinking of negative. Or
Yeah. The question is, so let's say,
There is no ordering for AAA.
okay, but if we have beginning AAA of 10,000, we have a loss of 10,000 and a distribution of 10,000.
Uh-huh.
If you do distributions first, then you don't have any dividends. But if you do losses first, then you do have dividends.
oh, I see what you're saying.
Right?
Yeah,
Assuming there's ENP.
because AA would be 10,000. So then you would.
No, all the things are there to measure. I don't know the answer to that.
Because if there's a distribution out of AAA, it wouldn't. Is that what you're asking? If it's a distribution out of AAA or EMP?
No.
Well, like, if you start with 10,000, if you take the loss first, you're at 0. So then you have a $10,000 dividend. But if you start at 10,000, take the distribution out of AAA first, then you're at 0, and then you just go to negative with the loss.
I hate you right now.
Gift card.
So this is one of those moments where I say, I don't know, because I don't know. But on one hand, I know for distribution purposes that you measure distribution against basis as of the end of the year. So if an S corporation made a distribution in Q1 of a year and basis for the shareholder was 0, you don't know if you have a distribution in excess or not, because you measure basis with respect to distribution in excess and running through the basis rules as of the last day of the year for basis purposes. And as I try to apply that same concept potentially, I bump into a wall because your point is not lost on me. Because if I had AAA on day 1 and I made a distribution on day 1 and I had the ability to distribute that out on day 1 and I have a loss on day 2, can I get that out and use the AAA as a guidepost for that distribution? I honestly don't know the answer to that. And who said that you should get a gift card for that?
All of us.
That was a really good question. I genuinely don't know the answer. And we bumped it up to 50.
Let's. Cheers now.
And I do hate you.
Us too.
Because I should have been able to. That's something that my mind would generally kind of capture as a nuance, because it just should. That one, that's a really good question. Let's see.
You're sleeping after that.
Just waiting for an answer.
Do you guys feel as though you need to do an exercise, or do you understand enough?
I feel like all the exercise we did on the whiteboard were good. Like the repetition was good.
If it was good enough to move on?
Yeah.
Yes.
Okay, that's my question. But in your spare time for fun, if you want to run through this, it's probably not a bad exercise. And that gets back to being intellectually, what was that, Lane?
Curious.
Curious. And breaking stuff apart and
Curiosity kills.
Jimmy will do it after Memorial Day.
do what?
If we leave right now.
We'll promise I'll do the problem if you let it be.
What did you just say? I did not hear it.
You don't want to hear it.
Probably for the better.
I didn't? Now I really want to hear it. What did she say?
She wants to leave 3 hours early.
Is that what she said?
I did not say that.
Every
I guess there's a bigger storm coming.
Storm got moved up.
Yeah.
Yeah, it's coming.
Storm bigger.
It's huge.
I'm scared. I don't like storms.
Mosquito is the biggest baby with any type of
Peter, look from where you're. First of all, I live by myself now. Second of all,
It was stormy.
I got a new car, so I gotta worry about hail. Third of all, I don't have a basement, so if there's a tornado, I'm dead. So do your neighbors. Who? The old people that live next door? I'm not knocking on the door.
I'd rather die than not do they don't.
I haven't even been downstairs yet for any.
You're insane for that. You actually were like, no.
Okay, we're going to get back to it. We talked earlier about 1001 and the fact 1001 impacts lots of things. And I stole some of the slides out of here and put it at the beginning when we were talking about the C Corp rules that apply both to S and C Corps, and talking about the exceptions. And 1001 is a concept of proceeds compared to basis to get a gain loss. And we talked about 311 and 311 when we did that. So 1001 says compare proceeds versus basis. And we went through these examples to say, well, here's all the things that could. So we use 1001 all the time. We should recognize where and when we use 1001. Okay, simple transactions can have 1001 applied multiple times. Well, that's a poorly constructed sentence. There are multiple times 1001 can be applied, is a better way of saying that. Distribution of appreciated property from an S Corp that's always been an S Corp. Distribution of appreciated property from an S Corp with C Corp history. Distribution of appreciated property with redemption of S Corp. Distribution of appreciated property, redemption of C Corp stock. Sale of assets and liquidation of C Corp. Sale of assets and liquidation of an S Corp. So what I think we're doing on this is, well, if we have 311B that says no gain or loss is going to be reported on the distribution of an appreciated item, and then B says, well, if there's appreciation, just kidding, you have to report the gain. It's a poorly constructed, or I don't particularly care for how that was constructed or written. So if we have land with basis of $50,000 and Bill owns the corporation, and the AAA of it has CEMP of 40. Is that what that says? Yeah. And AAA of zero, if the corporation sells the land for $100,000, how much gain is the corporation going to have?
50.
50. So we said before AAA and basis go up equally for items of income, deduction, loss, and distribution. So how much is my AAA started out at 0? What's my AAA go up to? 50. Okay? So now I got AAA of 50. And how much was my EMP? 40. Okay? Then we have a K1. We have beginning basis of 10 for Bill. The K1's issued to Bill, and we have gain of 50, correct? And we have ending basis of 60. So now we have multiple data points. We have CEMP of 40, I think, AAA of 50, and basis of 60. If the corporation then distributes the 100,000, tell me what's happening here. Anybody?
I'm writing down the facts.
Okay. Emma's making eye contact again. I'm just looking, man. Is that what you said earlier?
I said I'm just looking at you because you're talking. But you weren't talking that.
Which made it more weird. So, anybody want to take a shot at what this is saying?
Is that a capital gain?
Let's walk through piece by piece.
Well, it's saying that he got income of 50,000. Well, it's saying first in the AAA column that.
We have a beginning amount in AAA of 0.
Yep.
A beginning of CEMP of 40. Basis of 10. Correct?
Yes.
And
And then
then-
we put in the income.
Okay.
So that hits AAA. And then it also impacts his basis
Yes.
for the same amounts.
Yes.
And then we have to look at the distribution. And we first have to look, since we have EMP, we have to look at AAA. and deplete, we'll look at the AAA balance, and it will deplete the AAA balance. Of
So in AAA, we call it the guidepost, right?
yes,
So how much is our AAA?
50,000.
50,000.
So we put half of the distribution to AAA.
Okay, so we started at the NAD level, right?
Yes,
So our total distribution is what?
100,000.
So the first tranche that we're categorizing at the NAD level is how much? 50.
50
Because that's what's in AAA. Second stop is what?
EMP.
How much do we have of that?
We have 40,000.
We have 40. So the next stop is,
And then you still have 10,000 remaining. So then you go back to AAA.
no, now that's just normal distribution rules.
Yeah.
Okay?
So
So now that we broke that up into its separate categories, 50,000 is AAA, which tells us normal distribution rules. The normal distribution rules say what?
normal distribution rules say that you get a tax-free return up to your basis.
Okay, how much?
Everything in excess.
Okay, how much basis do I have?
Well, now that we have the gain included, we have 60,000.
Okay,
So then the distribution that is hitting AAA gets our basis down to 10,000 because that's a regular distribution.
yep,
And then the 40,000 hitting EMP is a dividend, so it
Yep.
doesn't impact basis.
yep.
And then the remaining 10,000 that was a regular distribution is we had 60,000, then we had 10,000. Oh, so we have zero basis.
It's a tax-free return of basis, which gets our basis down to 0. See, the point on some level is we did 3 or 4 iterations up here, and like, yep. But as soon as you let's turn the lens just slightly differently. We talked about 311B and the fact that there's a gain associated with the distribution of appreciated property. So, well, that's interesting. Well, that's a nice little data point that exists in its own separate bucket. But now, when we have that distribution in excess, all these other levers or switches or whatever turn on, because that distribution affects AAA. It affects basis. It affects lots of things. Then you have to recalibrate or reset those amounts based on the transaction that just occurred in order to diagnose the tax impact of the distribution. Okay? Okay. Oh, that was a sale of property. That wasn't a distribution. Sorry. That was a straight up sale. Because this one is, what if Bill distributes land to himself?
Instead of cash.
Mm-hmm.
Wow, I should have that this year.
Do what? Well, you should have come to this first. So what happens when Bill distributes to the ground? Trent, you look like you have something to say.
Doesn't it get stepped up to fair market value? Wasn't that the point that Burton was talking about? Why you don't want land in the S corp?
So when you say get stepped up to fair value, 1001 would say, 311 says that, 311B says when you distribute property out of a corporation, you have to compare the fair value of that property to the basis and calculate a gain or loss. The same rules under 1001. So now we have a distribution of this property out of the corporation. How much gain does the corporation have? How much?
50.
50. Because this is no different than the corporation selling the ground to a third party for $100,000 of cash. So the first example is we get $100,000 of cash. That to me seems like a more obvious analysis because you actually got the cash. But if the corporation distributes the ground out to Bill, it becomes less obvious because you have to stop and ask yourself the question, what's the fair value of that ground? The fair value of that ground is 100,000. And 311B says you need to do a 1001 analysis of what the gain is on the ground. So how much is the gain, Trent?
I wasn't listening.
50,000.
50,000.
50?
Sure.
How you feel about that?
Not great.
Lane, how you feel about that?
It's 100,000 minus 50,000. 50,000.
Did that answer how you felt about it?
I felt good about it.
Okay, that means she felt good about it. That's right. It's a $50,000
Make
gain.
me second guess myself on like this little calculation.
That's actually a gift I have. Is because I know the answer. I know you know the answer, and I'm not going to let you off the hook. I mean, you have to go, yeah, that's the answer. Because I'm not going to go one way or the other. I'm just going to let you make your determination. It's $50,000. So when the corporation distributes that ground for $50,000, how much is going to go on the K1, and what do we do with that information with respect to Bill and his basis?
50,000.
50,000 what?
Gonna go on K1. Gonna increase his basis.
Okay, so now his K1 is 50,000, his basis goes up by 50,000. What was Bill's beginning basis?
10.
10. So his revised basis is 60. Okay, so Bill received the ground, correct? Is that a distribution? So now we have to, did we distribute cash or did we distribute ground?
Upper.
Okay, but it's still 100,000. So now we have to use that $100,000 fair value at the entity level and segregate it by its own particular bucket. So what are the buckets that we have to segregate that 100,000 into for distribution purposes? AAA, what's AAA?
Undistributed escrow.
That's correct. But what's the amount on top of it?
50,000.
50,000. So we have a $100,000 distribution. So the first tranche of the entity level distribution that we're measuring is 50. How much do we have left over? 50. So of the next 50, how do we categorize the next 50? What, Emma? How much E&P do we have? 40. So the next tranche is 40,000. How much do we have left over? 10. So now we have to take those pieces of information that we've now harvested and run that through the analysis at the shareholder level. So how much of the 50 that's distributed is a return of basis or a distribution in excess?
It's all return.
It's all return of basis because the facts didn't change, did they? The only thing that changed is we distributed ground. That's the only thing that's changed, but that mere change is enough to say what the F is going on.
It makes it seem more scary.
Do what?
It just makes it seem more complicated.
But it's not.
Yeah.
It really isn't. So it's the exact same analysis where we have 50 return of basis, no gain in excess, 40 of dividend, and 10 return of basis with zero basis for Bill at the end with a $40,000 dividend. So here's the thing, that, and maybe, not maybe, it is experience and I'm going to call it experience. I don't know a better way to say it. That says, hey, I have a distribution of ground from an entity. The distribution of the ground has its own what, Trent? Diagnosis. Which says that distribution of the ground, I have to review my rules under 311 that says what happens. The ground comes out, 311 decision tree, because now I have to diagnose it, says what's fair value? Fair value is 100,000. Okay, fine, got it. What's basis? It's 50. Fine, got it. Now I have a $50,000 gain. Okay, now I'm through. I've taken from the beginning to the end, cradle to grave, my 311 analysis. So now there's this next piece that says that $50,000 affects something. what does that $50,000, what does that $50,000 affect? Hold on, what was that?
AAA and basis.
50,000, 50K affects AAA and basis. So now I know I got a beginning basis number of how much? 10. I get to add the 50 to that. And I have AAA of what?
0.
0. So now I have AAA of 50. All right, that seems okay. Does that seem the terminal point of that piece of the analysis? Probably. So then I know, and this is probably why it's a little bit harder, because I sold the land in the first example, and I had cash. Cash came into the corporation, cash left the corporation. Well, the thing that generated the $50,000 gain was the item leaving the corporation, was the land, which makes it seem, Sam,
Complicated.
more complicated, because now you have this other piece that seems a little bit more invisible that you have to account for. So now that I've done that, well, I had land and it was distributed. Well, what's the amount of the distribution? How do I make the determination of the amount that was distributed? Does anybody know how to make the determination of what was distributed? How much was just distributed?
The fair market value.
The fair market value. The amount that you utilize to make the determination of the gain loss, the fair value of the proceeds is the amount that's being distributed. So now I know my 100,000 is what's being distributed. So now I have the 100,000 that I've categorized. So now I got 100. All right? What's the procedure with respect to the 100? Now I got the 100K distribution. This was income. What do I do with that $100,000 distribution? What's the procedure? Huh?
Run it through the trenches, make your AAA as your guidepost.
Now you have to categorize it into its own buckets. So you have to categorize it by 1, AAA guidepost, as Sam said, 2, EMP, 3, normal distribution. And we said AAA was 50, 40, and 10. So now that we've categorized it by 50, 40, and 10, now we take that data and do what? Go back to what we adjusted before, basis. How much basis do we have? 60. So I know, because I've categorized everything, I got 50 that my guidepost AAA said is distribution. I take that 50 and compare it to my basis. I got 60 a basis, 50 a distribution. Therefore, I don't get outside of B1, which says it's a return of capital. Then I go to, well, I've now got to the terminal point of that first tranche. I've dealt with that completely. Now I got to deal with my EMP. The corporation just has to do a 1099 div. Doesn't affect basis. 40,000 now is a dividend. So now I've got to the terminal point of that 40. So now I got 10 of normal, which says normal is B1, says return to basis. Anything in excess of basis is distribution in excess. How much basis do I have after I got to the terminal point of 1? 10. How much is my distribution? 10. So now I got basis 0, and I've got from beginning of distributing ground, running my 311B analysis, taking the data that I got off my 311B analysis, and affecting all the tranches or the pieces that I have to account for from the beginning to the end. Then I categorize my distribution between all the buckets, then I run it back through basis, or the process. There's a lot of moving parts. They aren't hard. There's nothing hard about what we just did. 0. You know what's hard? Knowing what pieces to use. Knowing the pieces, recalling, well, 311B is distribution of property. I can pull that out of my toolbox, and I run that analysis. And they go, what the hell else do I got to pull out? Each piece is easy. Because when we were doing the 6 examples of 200,000, 400,000, 800,000, whatever those numbers were, it was like, yeah, I got it, man. I'm an expert. Yep, got it. Introduce something slightly different, and I hate to do it, but we go all Distler. Sorry, if that bothers you, you're going to have to let me know. Okay? Because that's what happens. It's like, well, shit, I've lost my bearings because I'm now outside that one little square, that one little box that I was comforted by because I only have 3 moving parts. And I don't have to worry about what else has to come out of the toolbox. Distribution of the appreciated property from an S Corp that was a C Corp. Because it looks like I actually might have put some sort of steps or procedures in here that I don't even remember. And we'll see how close I was in describing what the hell happened. Okay? STCO distributes land fair value of 100 to MC, whoever the MC is. Land fair market value of 100, basis of 50, AAA of 50, basis in the shares of 25. Is that what that says? Okay, 25, EMP of 40. Step 1, calc gain at the entity level. That feels like what we did before, right? I had to start with my 311B analysis. Step 2, gain, what's that saying? Reported to shareholder on K1. That feels okay. Land fair market value. Tax result, K1 of 50, 25,000 distribution excess, basis in land 1,000. So, well, I don't know what the hell step 1 is. Step 5? Where's step? Does that say step 5?
Yeah. Step 3 is above AAA.
Oh, where? Here. Oh, fuck. Okay. Step 3, adjust AAA to get me to 100. Adjust basis is step 4. Oh, look at this. This actually is not terrible. But I was actually struggling with what the hell I was saying. Step 5, categorize distribution by its particular categories. I mean, I think the way I did it before probably was better by saying, hey, this is what we're doing at the entity level, and then we have to translate that out, but that's what this is doing. Distribution of the appreciation from S Corp that was a C Corp. You guys, unless I see something startling here that we need to stop. Definition of a redemption. I'm not sure that we care because who did I pick on for that? Was it you?
Yes.
What's a redemption?
Oh.
Yeah. What do you mean, Jack?
Buying back stock. Business buying back stock.
Business buying back stock. So I'm not sure if I care about this or not. 302, I don't care. I mean, we talked about it. But so I don't know if this is important, but this might be. Let's explore this page because, again, Thomas, are we here to be experts?
Nope.
We're here to learn something, though, right?
Yep.
So, 2 possible outcomes of redemption. Outcome number 1 is shareholder sold stock, corporate purchased stock, corporation retires proportional share of CEMP and AAA. That was on the other page that we had, I think. Outcome 2, shareholder receives a distribution from AAA and or CEMP because if it's number 2, we have to categorize the distribution between AAA, EMP, and normal distribution, assuming the corporation has CEMP. If it doesn't have CEMP, Natalie, do I give one shit about AAA?
No.
Nope, I don't. Not at all. Okay? Redemptions, I don't care. Because we kind of covered this. I don't care. I have a feeling I don't care about any of this anymore. I'm starting to develop your guys' attitude. I feel like a storm's coming. Why was that funny?
She's scared of storms. There's a nervous laugh.
No, that felt like she was laughing at me.
Can I ask something before we move on
Sure.
from my question earlier? Me saying distributions was bad. I shouldn't have used distributions as my example.
Shame on you.
I'm sorry.
I have no idea. Just, hold on, stop. Does anybody know what the hell she's talking about? Because that sounded like, don't send me to the electric chair. It was terrible. So I'm glad that nobody else knows what the hell you're talking about, Sam, because I'm like, what shame did I throw at you?
I was asking about negative AAA.
Yeah?
And the return goes final. It's truly just a guidepost. Like, we do not care if it's negative. Like, it doesn't trigger anything, like gains or anything, if it's negative when the S4 goes final. It just, like, goes to the dumpster. So we literally just use it for the guidepost for the distributions.
Yes,
That's all AAA is used for on a return.
as far as I know.
That's so bonkers to me.
Well, I could be wrong.
Well, it's nice. Like, it's
I mean, seriously, I could be wrong, but I don't. I've never seen AAA referenced or used in any other fashion.
wow.
So
That's great to know.
that doesn't mean that I'm right,
I could
because
ask you.
there's lots of things. There's been more than once in my career I've been standing on what I feel to be such solid ground that nobody's going to push me off of it. I know what I'm talking about. And I walk out going, oh my God, I was an idiot. And that's sincerely happened, where I would have bet my house I was right in these situations. And it's happened, I don't know, something more than 5 and something less than 10 times. I would bet my house. It's like, ooh, that didn't go well. I mean, so I've been around enough to know I don't know everything. I've been around enough to know that since I don't know everything, that means I could be wrong even in the shit I really, really know. So I concede right up front, I could be wrong. There could be something I don't know, because there's a lot of shit to know. A lot. Do I really want to do this?
No.